Today we're joined here with Dr. Fang. Thanks for joining me. And we're going to be talking about the basics of cryptocurrency, which has greatly risen in mainstream popularity in the past years. So let's start with the basics. What are cryptocurrencies and what role do they play in our economy?
Well, cryptocurrencies are digital currencies that build on decentralized systems and rely on cryptography for security. So there are three special things about cryptocurrencies. First, they're virtual, meaning that they have no physical forms. There are no bills, there are no coins, and even if you own cryptocurrencies, you can't really open your wallet and see them. Second, all cryptocurrencies are secured through cryptography, meaning that encryption techniques are used to ensure that records of cryptocurrency transactions are not tampered with. Finally, most cryptocurrencies are decentralized, meaning that there's no central issuing agency like the Fed or central clearing agencies like banks or credit card companies. So they rely exclusively on the distributed ledger technology, typically blockchain technology, to record transactions. So your second question was, what role do cryptocurrencies play in our economy? Now, to understand the role that cryptocurrencies may play in our economy, we first have to understand how they were created. Right? So going back to the 90s, some folks who like to label themselves as cypherpunks grew increasingly skeptical of central banks, and not just the US central banks across the globe. So they really wanted a decentralized currency that is free from government involvement, free from government intervention, and truly native to cyberspace. And of course, it was not until 2008 did Bitcoin, the first real cryptocurrency, become a reality. So for this reason, the proponents for cryptocurrencies, especially the early creators like Satoshi Nakamoto, strongly believed that cryptocurrencies could provide a significant benefit to the society by overcoming the lack of trust in government and by increasing everybody's access to financial services. So along that line, cryptocurrencies can serve as a medium to support economic growth, especially in developing countries, by widening financial inclusion, providing a better traceability of funds to battle corruption, for example, and for helping people escape poverty. Now, of course, right, we have the opponents for cryptocurrencies, and they point out, right, a number of reasons why cryptocurrencies may be bad for the economy. For example, mining, right? Mining Bitcoin and many other cryptocurrencies still burns a lot of energy, traditional energy, which is arguably bad for the environment. So hopefully we will see a switch to the use of renewable energy soon. And cryptocurrencies got bad names because they raise concerns about cybersecurity issues, dark web, and other criminal activities. But these are kind of like really abstract roles in our everyday life, right? Cryptocurrencies kind of work just like dollar bills now because they can be used to buy goods and services at a lot of places. For example, many online businesses now take major cryptocurrencies like Bitcoin and Ether for payments where PayPal is accepted after the online payment company introduced its checkout with crypto service this year.
Okay, so it's really grown in popularity with having those just everyday Main Street businesses accepting cryptocurrency. So
yes, I would say that it's definitely start to gain mainstream acceptance. The wide acceptance is not there yet, right? But it's definitely moving towards that direction.
Yeah. Okay, great. Well, I wanted to back up and ask about one thing you mentioned, which is blockchain. I think that's a idea that it's kind of difficult to understand sometimes. So do you want to explain what blockchain is and how that, builds crypto?
Right. So that kind of takes us to the question, right? What is a blockchain?
Mhm.
In simple terms, blockchain is just a multiple party data sharing platform. So new data can only be uploaded if the participating computers on the chain agree. Existing data cannot be edited or subsequently modified. Now, in more technical terms, a blockchain is a distributed, append-only ledger, provably signed, sequentially linked. So you see kind of blocks linked on the chain, right? And we have secure transactions that are replicated across the network. And the unique thing about blockchain is the updates of these transactions are not appended by a human or a government or any other central authority, but by a software-driven consensus. And this consensus in the Bitcoin version of blockchain is commonly referred to as mining, which I'm sure that many of you have heard of.
Mhm. Yeah. Yeah, so you mentioned in terms of mining, there's that environmental concern associated with it. So how do you take mining and create that to be more environmentally friendly? What does that actually involve?
All right, just to give you a sense how much energy that mining could use. I have a friend who is local to Minnesota who used to run a small mining farm in his own house, and he was only running about 10 mining equipment. And he was looking at about 9,000 electricity bill every month.
Wow. Okay.
Right. So we're not talking about a trivial amount of energy, right? Mining uses. There are two hopes. One is that we change the protocol and to, for example, proof of stake, right? Something that uses less of energy. And Ethereum, a second popular blockchain just next to Bitcoin, is thinking to update to Ethereum version 2, which supposedly uses more environmentally friendly mining process, mining protocol. And the second hope is that we switch to more renewable energy use, right? Which is more environmentally friendly.
Okay. Okay, great. To kind of go back now again to the beginning and the basics, I wanted to ask generally, how do cryptocurrencies get their value?
Yeah, so that is probably the toughest question to answer.
Sure.
Yes. Yeah, and if assets like stocks or equity, we can apply valuation techniques such as discounted cash flow models, right, to get a sense of whether stocks are overpriced or underpriced. Now, for fiat currencies like US dollars, the Fed plays a big role in determining value. But unlike stocks and fiat currencies, cryptocurrency values are mainly affected by supply and the market's demand for it and competing cryptocurrencies, which makes it very difficult to come up with a precise number. Now, I can give you some arguments as to why cryptocurrencies have value, right? Especially to cypherpunks and the libertarians, because they represent decentralized currencies that are free from government intervention. So you always have people behind cryptocurrencies or loyal to cryptocurrencies all the way. And they're also of value now because they serve as a medium of exchange, right? And they allow us to buy goods and services online at many places now. And they're anti-inflationary by nature. For example, Bitcoin is capped at 21 million, right? You will run out. And the new blocks are now going to get Bitcoin rewards by 2040. However, on the other side, most cryptocurrencies have no intrinsic value. They don't generate cash flows like firms do, right? And nor do they have stable stores of value. So there are arguments for and against their value. And there are some valuation techniques we can get a sense of relative values of one type of cryptocurrency against other types. But to come up with an absolute number is really challenging.
Yeah, yeah, that sure sounds like it would be.
Yes.
Awesome. So you've mentioned Bitcoin, and I think that's a currency that everyone's familiar with. But what are the other ones that exist? And my second question is, are there certain forms of currency or certain types, I should say, that specific groups of people gravitate to?
Yeah, well, Bitcoin was the first real cryptocurrency because it runs on a decentralized blockchain, and it remains to be the most popular one with the largest market cap by far. I think I just checked before today's interview. The market cap is sitting around $750 billion.
Mhm.
And the second most popular cryptocurrency and the one with the second largest market cap is Ether, which builds on the Ethereum blockchain. Now, Bitcoin was intended to be a currency from the get-go. So it is meant to be a cryptocurrency. Ethereum, on the other hand, was created to allow computer developers to build and publish smart contracts, which is why Ethereum describes itself as a programmable blockchain. And for that reason, Bitcoin attracts more general investors, right? Everybody who thinks of cryptocurrencies kind of gravitate towards Bitcoin. And Ethereum, on the other hand, definitely attracts more tech-savvy investors.
Mhm.
Um, the other two popular cryptocurrencies, I think it would be Litecoin and Bitcoin Cash, and both of which are spin-offs of Bitcoin. So they used to be part of Bitcoin and they become a fork. That's what we call them. And one unique thing about Litecoin is that, as you can probably tell from its name, it confirms transactions much faster than Bitcoin.
Mhm.
So it takes Bitcoin about 10 minutes to process block, but it only takes Litecoin about a quarter of that time, 2.5 minutes, to process a block. So that's a pretty attractive feature about Litecoin.
Okay. Okay. And just to clarify one thing, a blog, is that a purchase done with that coin?
Some transactions,
Okay.
yes.
Okay.
Yes. So if I transfer, probably not going to transfer one Bitcoin to you. Let's just say I transfer 0.001
Mhm.
Bitcoin to you, right? That could be a part of a block. But usually one new block contains more transaction than just one transfer.
Okay. Okay. Gotcha. Great. Well, I wanted to chat about future regulations. And I know this is another big question is, what, if any, can we expect?
Well, the short answer is yes.
Mhm.
Or we should definitely be expecting more future regulations. And just this month, both the Fed and the SEC are repeatedly calling for more crypto regulations. And I think this Tuesday, the SEC chairman, Gary Gensler, was describing the crypto market as the Wild West, that rife with fraud, scams, and abuse, and threatens national security. And he was calling on Congress to grant the SEC more scope, more authority, and more resources to oversee the crypto sector. Now, my personal view, and I could be wrong, is that regulations are not a bad thing for this market. A blanket ban would be bad. But regulations are necessary steps to the stability and acceptance of cryptocurrencies, right? And nobody could deny that this market is incredibly volatile, right? We see extreme price movements, both on the upside and the downside. So even with Gary Gensler's comments, I don't think the crypto market react overly negative to them. The biggest policy debate we face is whether we should view cryptocurrencies as securities like stocks or bonds. And that kind of, takes us to the question is that how should we regulate the issuance of cryptocurrencies and trading of cryptocurrencies? If we should treat them as a stocks, then the regulation, right, the issuance of a cryptocurrency should be treated as stock offerings. So that's a big debate. And the SEC definitely needs to provide more clarity on that front. Another important issue here is that how the tax authorities, right,
Mm.
levy and collect tax from crypto transactions. For example, if Tesla starts accepting Bitcoin again, right, as a payment for the car, how should we view transactions like that, right? How do we collect tax from crypto transactions? It is clear that the IRS makes it very clear that anybody who profits from Bitcoin mining or transactions should pay tax. But the tax authorities still face incredible challenges in collecting tax from those profits.
Okay. Okay. So what I'm hearing is that cryptocurrencies like Bitcoin they're here to stay, especially with likely upcoming regulations. So where should people turn if they want to learn more about these cryptocurrencies or want to invest?
Well, they can always come to the U and take a class with me.
Yeah.
Joking aside, there are many books and YouTube videos that people can look up. For basics, the book Mastering Bitcoin, I think there's a serious book on Mastering Bitcoin and Mastering Ethereum is a good start. I really like the open course offered by Princeton University on YouTube. It's free, but the course is a bit on the tech side. So like for very basics, I think the short videos on YouTube are more than enough. And for crypto related news, websites like Cointelegraph and CoinDesk are great. And I read CoinDesk almost every day.
Okay. Okay. Great. Great. Well, I think that's it for everything I wanted to ask about. So is there anything else you wanted to add in or mention?
Not really. I'm just looking at your question. Yeah, I think. Oh, we haven't talked about NFTs.
Oh, yes. That was my second question I wanted to ask about. I just went right over it. We were chatting about cryptocurrency.
Yes.
Yeah, well, let's chat about NFTs here. And so those are non-fungible tokens, correct?
Right. So in simple terms, non-fungible tokens, the so-called NFTs, are tokenized digital work. And in real life, some people like collecting antiques or baseball cards, right? So you can sort of think of NFTs as digital collectibles or crypto alternatives to physical collectibles. And NFTs are created to authenticate ownership of a unique, one-of-a-kind digital work. And it could be pictures, videos, audio recordings, or really any type of digital files. They can do that because transactions of NFTs and resulting ownership from these transactions are recorded on blockchain, mostly Ethereum. Okay. And so because NFTs are created to represent unique creative digital work, they fit very well with industry like art, music, fashion, sports, right? Which is why in recent years, we see quite a few NFT projects launched by art galleries and major sports leagues like NBA Top Shot.
Okay, interesting.
And I think some of the NFTs are just like Bitcoin and other cryptocurrencies, they're here to stay.
So where do you find the NFTs? I'm curious, like if you were to sit down at your computer, how do you go and find NFTs? Is there a centralized database of them, or how does that work?
Google is your best friend.
Yeah, sure.
Yes. So most of the NFTs are running on Ethereum.
Okay.
And if you want to participate, they have their own websites for offerings and sort of instructions on how to participate.
Sure. Okay. Do you own any NFTs?
I do not.
Okay.
Yes, not at the moment.
Not at the moment.
Yeah, there are also some developments on virtual real estate. Oh. I do allocate a portion of my own assets into cryptocurrencies.
Sure.
Just no NFTs yet. And I invest in quite a few mining stocks.
Oh, okay. Well, that would make sense.
Yes.
If you're reading the crypto news every day. Awesome. Well, thank you, Dr. Fang, for joining me. This was a great conversation. It was super interesting.
Yeah, definitely. Thanks very much for inviting me.